Hello and welcome to the Capital Call. This is episode 15. I'm Quinn Millegan.
And I'm Drew Millegan.
And we skipped a week, so what? What are you going to do? But it's what is it, July 24th? I can't even remember.
Yeah, July 24th is when we are recording this.
Yeah. And I think it's it's one of those days, it's after the close, about 6 o'clock, time to crack one open. A Celsius.
Crack open a cold one with the boys, except in our case, it's caffeinated tea.
So, got to be energized.
Should be sponsored by Celsius at this point. I run on Celsius.
Been a long day of car breakdowns. Jeez.
Our personal lives aside, we're suckers for older classic cars, which inevitably means we wind up having to work on them. Quinn's a genius when it comes to that, though. He's got a whole separate...
I appreciate that.
I mean, compared to me, everybody's a genius, so don't take it as a huge compliment. But, you've got a YouTube series where you're fixing up one of those cars.
Yeah, if I ever get to it.
Yeah. We're real Renaissance men over here. So.
Oh, yeah.
But it's been an interesting few weeks since the passage of the new legislation they have.
And before you get into that, stay here till the end. In case you don't know, we have This Day in Economic History segment where I go through a bunch of interesting things that happened today in economic, finance, banking, history, and they're all a surprise to Drew.
Always. I'm always kept in the dark. He never lets me know anything.
Nope.
So it's, there's a saying in the markets, sell in May and go away. The summer trading is always very strange. It's a little bit lighter volume, a little bit weirder volume. It kind of feels like the whole season is like that single trading day after Thanksgiving, when the market's open for a single day and they expect people to be awake for that after Turkey Day dinner. It's interesting. People often go on vacation after the 4th of July and don't come back until September when you're talking the folks actually in charge of making decisions on a lot of the capital. I mean, you're talking people that are wealthy, so naturally they go on vacation.
And you used to see something on a much smaller scale during lunch hour. Volume goes down. And it's still somewhat of a thing, but less so.
You used to be able to trade on that. People would go out for lunch and they wouldn't be watching their trades. You'd be able to make a little bit of hay off of that if you sat at your desk through your lunch break, which fortunately or unfortunately we do actually do here at the fund. Probably violate a few labor laws.
What am I going to do? Sue myself?
Yeah, exactly.
That sounds like a good idea. I should talk to an attorney about that.
Of course, I wouldn't enforce that if we had an actual in-person employee here in the office. But going back to the market's been a lot less jittery now that we have more concrete information about what rules are being passed and which direction things are going and the effects of these rules. The market is just a discounting mechanism, which means that once you have the rules in place, it becomes a lot easier to make decisions, even if maybe the rules, it's agnostic of whether the rules are good or bad, it just is.
Yeah. The market is recovering from the lows of Liberation Day. The indexes are all positive, the Russell, the NASDAQ, the S&P. However, majority of stocks are still down, right? I mean, it's a lot of individual names that are contributing to that recovery, quote unquote.
And we, you'll hear on the radio or the news or whatever you listen to, they'll most often quote these big, quote unquote, indexes, which are essentially baskets of companies that trade. And the Dow Jones is very, very commonly cited because it's ancient. It's got one of the longest histories.
It's otherwise kind of useless as an actual indicator, but
right. There's only really a handful of companies that are in the Dow Jones, which makes it kind of useless as an overall economic indicator. But then you have the S&P, and then you have the NASDAQ. Dow Jones, the Dow Jones, the S&P, and the NASDAQ are all up between 7 and 9% right now in the year. Not up a huge amount, but it's up a notable amount for being halfway through the year. And then the Russell and
still below 1% up.
Still below 1% up. Notably, it only just recently went positive.
Yeah.
And that's very reflective of what the Russell is as an index. It's got a lot more names in it, and it's got a lot of smaller companies in it, which it would make sense why it would be up the least of all the indices at this time. What happens is that people filter into the big names, Apple, Boeing, what would traditionally be called blue chips, make up those big indices. Tesla's in them now. And then after that, they filter into the smaller names for price discovery, which is essentially what we've seen here. Once all the news is filtered out, then the small caps go and recover. Small caps are often the first to get hit as well.
Jumping to some macro subjects, I think I heard you listening to this video, but it was the president was going through the Fed building, which hasn't happened in 20 years. And he started talking about these numbers, the price cost increases of the renovation of the Federal Reserve. And he threw out a number, and Powell just starts shaking his head. No, what are you talking about? And he gets out the president actually gets out a piece of paper, to look at the line item that he's talking about. And they had included a building that was already built 5 years ago as a cost increase this year.
This has got to be one of the first times I've ever seen Trump fact-checked live, which is something he's usually good about preventing, but I got the impression that he wanted Powell to be with him as he toured the building so he could kind of use him as a set piece. Trump is just excellent at knocking people off balance.
Catching people off guard.
So, he typically likes to at least appear to be in control of the situation. I still think it's a terrible idea to try and remove the independence of the Fed, as I'm sure you would agree. That's how you wind up as Turkey. I've said it before, I'll say it again. You don't want to be Turkey or Venezuela or really any country with hyperinflation for that matter. But it's...
Beautiful countries.
Yeah, politicians like low interest rates because it's essentially pumping free money into the economy.
Yeah.
And
everybody wants to lower or raise interest rates because of their own personal gain. Right? I mean, a bunch of politicians are always yelling at the Fed to lower interest rates, raise interest rates, whatever they want.
Which is exactly why they made the Fed independent when they created it. It's, it's just one of those things where everybody's agreed that you don't touch this third rail. You appoint the guys off cycle for the elections. You can't appoint a new chair of the Fed from outside of the Fed Board of Governors. It's very, very insulated. And it's interesting that they've taken this tactic to kind of go after them. I'm sure Powell would love to just... It'd probably be much better for Powell personally if he resigned. I'm sure he doesn't want to have to be doing this at this point. Like, what does he have to gain? He's just getting attacked all the time politically. Everybody hates him.
By the way, on market volatility, the Dow Jones lost 4,000 points in just 2 days after with Liberation Day, and by June 27th, the S&P 500 had fully recovered from the crash lows.
Yeah, sounds about right. It's not great. Another thing with those tariffs too. We keep talking about tariffs. I feel like every time we come on this podcast, we it's like what new horror has happened in the world of international trade. But the tariffs recently, they've started having deals be struck with countries. There's been some criticism. We said this before on the podcast. He had 90 days to come up with deals for over 100 different countries. Like, unless he did a deal a day, even if he did a deal a day, 2 deals a day. It was going to be a hard number to meet. And
yeah, I feel like the assumption that the deals can't get done in time is a little bit of a red herring, because they could all happen in a day. Realistically, they could all be teed up and then they're all announced in one day.
It's
right?
true,
but I don't think they're good deals. The deal they came back with was 15% tariffs on imports from Japan to the U.S. paid by American citizens, and that's apparently the deal. And now they're gonna allow American rice in Japan, but they're ignoring the fact that Japanese consumers don't want to buy American rice; they want to buy Japanese rice.
Again, this gets back to the same thing where they're really hyper focused on trade deficits. They might as well be throwing darts at a board for these figures. I don't know where they're pulling them up, other than there was a vague, tenuous connection to trade deficits.
Yeah, and when that happened with Japan, people pointed out the big three came out against it, the automakers, because you can import a Japanese car at a 15% tariff, but then the ones built in the United States, even if they were parts sourced in the United States, because raw materials are being tariffed, but parts are being tariffed as well, end up costing about 30-40%.
Well, it's actually worse than that, because they're paying tariffs of 30 to 40% multiple times. Right. And of course, the counter argument to this is like, well, why don't they just source locally? And the answer is you can't. That's one of the most... Car manufacturing is one of the most complicated supply chains there are. There's a reason. It's not as bad as airplanes, But with vehicles, there's a reason why you kind of concentrate into a few larger auto manufacturers, or countries will sometimes have like a national champion auto manufacturer, and it's because it's difficult to put these things together. You're constantly going across borders in ways that you oftentimes will totally miss. Like, technically, there's a lot of parts that can count as being made in America, even though, like, a certain percentage of their parts are actually sourced from somewhere else in some factory where it's the only one in the world that produces this particular part, and you can't even make it locally. It's just a very shallow idea that you could... It displays it is kind of a scary lack of understanding of international economics that they're just putting on display here. So again, you're getting a situation where, like, the cost to manufacture a car in the U.S. may be like double what it costs them to manufacture in Japan, and then they only pay 15% if they just import the finished product. So why would you ever build in America?
One can hope there's some behind-the-scenes motive that benefits the American people.
Hey, I'm all for it.
One can hope.
Hey, I would love to import a K truck. Those things, the KEI trucks that they've got over in Japan.
Oh, yeah.
Fun fact about those, that they're like tiny little trucks, but they can usually carry more than like your typical F-150 Super Duty, just because the bed is huge. And one of the nice things in Japan, I don't know if you notice, in order to have a car registered in Japan, you have to prove that you have an off-street parking space for it, right? But K-trucks are small enough that they're exempt from the rule. So they're effectively an in-between category between like motorcycles and cars. But they've got all the carrying capacity and more of a proper truck. So I would love to be able to import them. They're just not usually street legal here in the U.S. Here in Oregon, you actually can't even register them legally. You have to go to Washington. So
You do?
yeah, I've looked into it. Well,
I don't think that's true. There's a rule. There's a 25-year rule where it doesn't have to meet any kind of regulations because it's considered a classic car, and you can thank Bill Gates for that because he wanted to import cars that didn't meet U.S. safety regulations, and so Anyways, they have this 25-year rule.
I agree with you in principle. What I'm saying is that whenever I've gone and done the research for actually trying to register one of these things, the advice is always get it registered in a different state, even if it's older. Or you have to find, because technically you're correct, but the advice if you want to get it registered locally in Oregon is go to a more rural DMV, because in rural areas, they're more likely to be seen as like a working farm truck. Because they're very useful. They're like ATVs, except you can carry stuff. So the DMVs in more rural areas are more familiar with them and therefore less likely to just tell you you can't register it. Because I have seen Oregon registered KEI trucks, but they're few and far between. I mean, heck, we've got a guy here locally that has a K-van of some variety, and I've always wanted to, see what the inside is like or what it's like to drive it, but I have no idea where he lives. And I'm not going to track him down.
You're not going to follow the van?
No, I'd rather not.
Free candy? Well, anyways, what else is on the roster as far as economic news?
Well, we've had the bank earnings come out, and they've been pretty optimistic overall, I would say. The banks aren't doing too bad.
Yeah.
Some of the consumer numbers are starting to come out that are and the factory numbers especially. Anything where you're on the purchaser side of things in the economy right now is looking a lot less rosy than the consumer side. Consumer sentiment is a fickle thing. It varies a lot, and in recent years it varies even by party affiliation, political affiliation, by a great degree. A lot of people don't realize that, but like if you're a Republican in a Democrat administration these days, you will be pessimistic. And if you're a Democrat in a Republican administration, you will be pessimistic. And that's relative to just, whatever the actual economy is doing. So
I wonder if there's people that do strategies based off of what kind of products different parties consume during different elections.
I'm sure that's a thing. I would be surprised to see if there's a large successful company that just makes decisions based off of that. I would say it'd be more like, for example, every time a Democrat is elected, typically gun manufacturer stocks go up.
That's that in action, yeah.
Right, so it'll vary by industry. I mean, certainly if you sell something that's sensitive to politics or to political affiliation, you are going to be aware of that. Whether you can do that just as the only strategy you have, I would question. It's only going to change once every 2 to 4 years. So
That's true.
that's why people get anxious around elections, because you don't know. It determines a lot of how people are going to act and think and feel over the next several years, even if policy doesn't even necessarily have to change. So,
Yeah.
speaking of politics and Japan, I do find the international currency markets interesting.
Yeah. Are they interesting?
Interesting. That's great. That's going to go over fantastically. It's been interesting watching the dollar just kind of get weaker and weaker. It's not at an absurd level. Like, the dollar has, like, what I mean when the dollar is getting weaker, by the way, that means that it takes more dollars to equal one of a basket of foreign currencies. So it's famously kind of weird to try and get a price on a dollar, because usually everything's denominated in dollars, right? So you gotta come up with baskets of other stuff. If it's inflation, you got to come up with a basket of goods. If it's other currencies, you got to come up with a basket of other currencies. So the dollar has been weakening relative to other currencies right now, which in theory is good for our manufacturing sector. The current administration is famous for saying they want to manufacture stuff in the U.S. again. So in theory, it's good for that, because it makes our goods more competitive. Same number of dollars costs less for somebody abroad. Suddenly, the $10 toaster is actually only $8 once adjusted. But it's not totally unprecedented. People keep talking about how weak it is, and it is weak relative to where it's been. However, the dollar was unusually strong for a few years going into this weakness. And actually, as recently as 2022, 2018, the dollar was as weak as it is right now relative to a constant basket of currencies. So it's not ridiculous. The pace at which the change has been happening is a little unusual, but still not out of the regular range. So it's not super concerning yet. But I say yet.
Yeah. What does that imply?
Not good things. It's been interesting listening to earnings calls of individual companies, especially that have exposure to the consumer or have exposure to international trade. Because the refrain that we are hearing from those companies is that a lot of them, especially like the retailers that had supply chains in tariff-sensitive countries, bought up a lot of inventory before the tariffs went into effect, front-loading all those costs, delaying other expenses so they could get these products in the door ahead of time and avoid paying the tax. And those stores and those inventories of pre-tariff merchandise are not inexhaustible. And the pause on the ridiculous tariffs is now coming to an end. So a lot of the really apocalyptic stuff basically didn't seem to come to pass, and that's in part because those really apocalyptic tariffs, if they were in place, were only in place for like a few days, and everybody had these inventories to run through. But on these earnings calls, we're now hearing that the companies expect to exhaust their inventories towards the end of this summer, early fall. Essentially the same timeline I've been talking about for many months. And at the point that they do run out of those inventories and they get into more recent stores, they're going to start raising prices. This is what they are saying they are going to do. Whether or not they actually do it in any large capacity, or they find workarounds, or maybe the supply chains were rejiggered long enough that they could afford to stay a little bit lower and competitive for a little longer, is a question. But the price hikes, they're telegraphing that the price hikes are coming. And again, you see that reflected in things like the purchasers index, which is the prices that the retailers are paying their middlemen and their suppliers. Those have already gone up, and it's essentially just a matter of time before you start seeing that in the consumer price inflation.
Another indicator of sentiment that I noticed, I don't know if you saw this, but what was it? There's been a record amount of business bankruptcies skyrocketed in 2025.
Yeah.
371 filings recorded in the first half of the year, the highest total since 2010.
That doesn't surprise me. Another thing that's happening here is that the stock market, where we're invested, is not the economy. I'm going to say that again. It's not the economy. And there's this misconception that, you just look at the stock market. It's doing great. The economy must be going gangbusters.
And there's not a single politician that has any effect on the stock market.
That's not entirely true. It's just usually short-lived.
Any real effect that's not sentiment-based.
Right, that's not sentiment-based. That's a good qualification.
Like whatever president is in office is not responsible for the S&P appreciating or depreciating.
But you'll bet your bottom dollar they'll take the credit if it's up, and they won't take the blame if it's down.
Oh, absolutely.
It's always somebody else's fault if it's down.
That's how it works.
But getting back to this, the stock market is not the economy. A lot of these bankruptcies are focused in smaller businesses that don't have the flexibility to readjust their supply chains on a whim or take away from capital expending over here so they can buy inventory over here. They're living paycheck to paycheck, basically. So when you have these massive tariffs come in, especially for specialized businesses where they only have one vendor in Chongqing, China, it's really devastating. They essentially have no alternative. I hear stories all the time. I think I mentioned this before. It's like where they look at these tariffs. There's nowhere around them, so they just go out of business.
But as far as the stock market is concerned, I think you're getting to the point where people are picking winners and losers on this upswing, on this recovery. And, we've used our own recovery to reallocate to some of those names that have not appreciated yet. Great buying opportunities. If you can allocate in an environment like this where there's discounted names, we like doing it.
Yeah. If you have, smoke them if you got them, I suppose. Yeah. If you got dry powder, now is the time to deploy it.
It's like, we look at, and we bought a position in this, Helen of Troy, HELE. That company, you don't necessarily buy a company you're really excited about, that you love to use. It's kind of a boring company. They sell like shampoo, conditioner, that kind of stuff, certain beauty products. But people really hated them because they were very Asia heavy, China heavy as far as their production is concerned. And they've been kind of on a
rapidly decreasing downward trajectory.
Yes, exactly that. But you actually listen to management, and they sell a lot in China. So what they did is they just shift their production elsewhere, but keep the production in China to sell in China. And so some of these effects that people think are extremely detrimental aren't so black and white.
Right. It's like the government's projections that they would collect trillions in tariffs, which turned out to be totally wrong. What happens is that everybody shifted their purchasing patterns such that they didn't have to pay the tariffs. Tariffs are one of those kinds of taxes that's relatively easy to avoid. And the other thing with Helen of Troy is that they're not actually totally eliminating their tariff burden. They're just reducing it, which means it's not as devastating, but it is still present. They've done pretty much as they possibly can. To the point that I don't think they're going to go bankrupt. And
it gets to a point where it's so undervalued that you're thinking, I can't not buy it.
Right. There was actually another chemical company who I won't name that we also took a position in, and I absolutely detest these guys.
Oh, I hate them. The management sucks.
They're never responsive to investors. They have no earnings calls.
Yeah. Now, the management is good at actually running the company.
Yes.
But they are dumb when it comes to managing their investor facing, and so they get into this cycle where they're not good at releasing information, they're not good at disseminating it, and you see just lower and lower volume, and it trades in this range.
Right. So we'll wind up in this position where we go, oh, shoot, I gotta buy this company again because they're in the dumps. And at least before they had a you could probably figure out what company we're talking about by how much we're talking about it, but they used to have a dividend. I used to love that dividend. You would buy in, you would get paid to wait around, and then you'd make a decent buck on the back end.
They still have the dividend, they just cut it significantly.
They do.
And the thing is, management owns the majority of the company, which is why they don't care about investors.
They don't have to.
But they will keep that dividend. They just, unfortunately, I was kind of surprised they cut it. But it made sense in the grand scheme of things.
We figured out what they were doing. They essentially cut the dividend in part to pay for financing costs of another deal they were doing. Here's a little tip that we like to think about when we're looking at a company for a dividend yield. What is a dividend yield? It is a cash payment, usually, not always, but often, that is made to shareholders on a per share basis. So you hear a company has $1 per share dividend. If they've got a $10 stock, that means that they've got a 10% yield, which is pretty darn good.
If you're talking a dollar throughout the year.
Oh yeah, $1 throughout the year. That's the other thing. I'm trying to keep it simple.
Yeah.
But there's always a question of how sustainable that dividend is, because a company is under no obligation to pay that dividend. It's just what they are currently paying, which is part of the reason why you get a better yield in stocks than bonds, because they pay a premium for you to take that risk that they won't pay it. If you look at the company ownership and a significant number of insiders own the company, or in one case they did a merger and it was a ship company and the ship captains wound up with a lot of the stock, there is a strong incentive for insiders to maintain the dividend, because that's oftentimes a big part of their compensation. If they cut that dividend, they're cutting their own paychecks.
Yeah.
So a company that has a heavy insider ownership will oftentimes maintain a dividend a little bit longer than a company that has no ties, no skin in the game, so to speak.
Yep.
Which you can take advantage of. People will go why are these guys paying this? It's because they don't want to be poor.
the old guy that owns 65% of the company is living off the dividend.
Right. That's his retirement. He's not going to cut that. There's another question of what happens when he dies. But you can refer to the actuarial tables for that. It's like an insurance calculation at that level. You can always get blindsided, of course. I mean, sometimes they'll cut anyways, but it's just a good rule of thumb we like to use.
Speaking of blindsided, we are long-term investors in, you guessed it, we mentioned it before, good old KSS, Kohl.
Yeah.
And
almost didn't mention that one.
What a day it had the other day. The street is now calling it a meme stock, because what was it? Did Roaring Kitty mention it or something?
Is some Redditor.
Yeah, some Redditor, Wall Street Bets, all that crap.
Yeah, it got posted on Wall Street Bets and
because
blew up.
I mean, rightly so. It had 50 to 60% short coverage. People were shorting the company, thinking it's going to go bankrupt. It is not anywhere close to being bankrupt. They have $8 billion in real estate, and at one point the stock was trading at $700 million total market cap.
It's got to be one of the dumbest valuations I've ever seen.
Insane. We were buying all along. And so we have a pretty good cost basis, and in pre-market it was up 100%. They were trying to do what's called a short squeeze, where essentially you're buying the stock and running up the price, and you essentially force the people that have sold it short to cover so that they don't get an insane loss.
Right.
And then it just keeps going up because they have to buy. Suddenly
right.
There's an insane amount of buyers.
Exactly.
And so the stock just keeps rising.
And we should probably clarify exactly what a short is. People that are going short are selling the stock that they borrowed from somebody else on the bet that it will go down and they can buy it back later at a lower price, therefore making a profit.
Yeah. I buy one share of Apple from Drew for $100. Yes, I know that's not the price. For $100 because I think it's going to...
You borrow.
Yeah, excuse me. I borrow one share of Apple from Drew because I think it's going to go down. And I take that share and I sell it immediately.
And I'm a long-term holder, so I'm not actually really doing much with the stock anyway. So as long as he owes me the share, I don't care.
Yeah, and I give him a tiny little interest payment.
It's like a loan, but with stock.
But so I pocket the $100, and then I wait for it to go down in value, right? And so when it hits, I don't know, maybe my target's $50. I buy a share and I give it back to him. And I'm $50 richer, and he's...
I've gotten my interest.
Yeah.
Sure, I don't like that it's depreciated, but again, long-term holder. I don't care necessarily if it goes up or down in short-term movements.
Yeah. So, and people get into options because you can lever yourself more, but it starts getting really complicated. It works until it doesn't.
Yeah. Option strategies are famous for blowing up.
Very risky. Now, the risk with shorting is also that a company can only go to zero. That's your maximum gain. It can keep going up into infinity.
Yep.
So...
And there is a general long side bias in the market, too.
But... Right. And so it's difficult to hold a short for I think you'd be hard pressed to short a company for 20 years or something.
Oh, you would be almost guaranteed to lose money.
Yeah.
Even if nothing happened, you would lose money just because just on the interest alone, you pay 5% interest for 20 years.
Insane.
That's 100% interest.
Yeah,
you've just paid the entire amount of the stock in just interest payments.
Yeah, and so it doesn't quite work like that, but your broker would make you cover it long before then.
You would. And so what'll happen is that, if you get into a short squeeze, that means that buyers are bidding up the stock, But then the short sellers are also having to buy back into their positions to cover the stock that they lent. So say I lent the Apple stock to Quinn at $100 and now it's at $200, and Quinn only has an extra $100 on top of that 100 that he got from selling the stock in the first place. He'll buy back the stock just to prevent an irrecoverable loss from occurring. Right. So what you'll get is that you will get a situation where you have regular buying, which then begets buying from the short sellers, which may even beget more buying just from people getting into the stock and sellers pulling back and saying this is going to go up a lot higher, which then causes a stock to double overnight.
And you know what? I hate to agree with the Redditors, but there is no reason that it should be 60% short.
Right.
Ridiculous.
I think whoever is shorting this needs to get their head examined. It's got to be one of the dumbest trades I've ever seen.
I think another thing that you have to be cognizant of, when we take short positions, we never short a company we think is going bankrupt.
Although that's a common strategy.
That is a common strategy, but and you can make a lot of money because it goes to zero, right? That is possible. But the risk to it is like Wall Street can bring a company from the dead, just randomly, out of nowhere. They'll take it from, it's trading at a penny, and people think it's going bankrupt, and then suddenly there's some fancy deal where it gets reworked into something else and it skyrockets.
AMC.
Yeah.
That happened with AMC.
That happens more often than people realize.
Right. So there's a lot of risk to it. Oftentimes you will see short sellers, even Hindenburg. Hindenburg folded up shop too. Actually, fact check that. Did Hindenburg close up shop? Yeah, Hindenburg closed up shop this year. And they were famous for doing a lot of short trades, but it's like a commodity trader. These guys don't tend to last a super long time. They are, by definition, short-term players, which is also a criticism that's been leveled against short sellers generally, and there's been suggestions that short selling should be made illegal, which I actually don't agree. I actually don't agree with banning it. I think that's a terrible idea. There's plenty of very common market makers, for example. Somebody that's taking both sides of a market in order to generate volume for other people that are buying and selling. Oftentimes, they will go short just to take the sell side of a trade. So you need shorting mechanically for the market to really fully function correctly. That, and I feel like people should just be allowed to lose money if they make bad bets. Like that's up to them to decide. Maybe you regulate who can short, but banning it outright doesn't make any sense to me.
The other thing to consider about the stock market, and I've said this before, is that the price of a stock is irrelevant to the actual value of a company. Mm-hmm. And that's where guys like us can make money for our investors, because we exploit those mispricings relative to the actual intrinsic value of a company. But you have these mechanics that allow traders to set the price, right? And so if you don't have, you have to have ability to trade on the bet that it's going to go up and the bet that it's going to go down. You have multiple mechanisms to do that, and eventually you find a price in the middle that's a prediction.
Which is the efficient market theory. It's the idea that if you get enough buyers and sellers in a market, they're going to come to a consensus that is probably pretty close to accurate.
Yeah.
And it's not always true. The efficient market hypothesis does break sometimes, which is where we come in.
Yeah. I mean, if it were always efficient, if you go by the literal basis of the efficient market theory, there wouldn't really be a market, in my opinion.
Right. There would be no point. It's like the question of, well, if the price is efficient now, why would I buy or sell?
Right.
It becomes a kind of loop, causal loop, and you can say that the market gets more efficient at predicting accurate prices further out into the future as information gets better, but I don't think you can really say that the market is perfectly efficient all the time, especially when you consider things like black swan events that nobody's predicting. A politician gets shot, or a war breaks out, or a pandemic happens. We made a lot of money on that trade.
Yeah.
But it's price is what you pay, value is what you get, and the reason we're sometimes early on these meme trades. Not the first time it's happened. It happened with GameStop too, which I still kick myself over.
Yeah,
but
we made money on it, but we didn't. We sold 6 months before the craze.
Yeah, the reason we sometimes wind up early in these trades is because we're one of the few outfits that really, really heavily weights the value of the underlying company more than the trading behavior. Although we do look at the trading behavior, but relative to how it values the company.
Yeah. Or we're not investing on forward momentum or projected growth. We look for existing value that is underappreciated.
Right. We do a little bit of legwork. We double check the prices. Does this make sense?
Yeah.
But we'll see where this goes. It's not gotten to the heights where I would consider it unreasonable at this time, which is why I would criticize its characterization as a meme stock. Like, yes, it's been picked up by internet traders as a deep value name, but I would still contend that even at these prices, it is still undervalued. There's a reason we got into the position. When you get all this attention, you start wondering, is it being valued based on just the craze, or are people actually looking at this? And I would contend a lot of people that get in after it becomes memeified are not long-term holders like we are. So there's a question of whether you get out just so you don't wind up caught up in that sort of volatility.
But guys, it's trading in the tens, and it has a book value, just a book value of nearly $34. It was trading at $6 in April.
It is kind of stupid. It's just like I keep questioning, like, they must have just been shorting it because they had few options to short. I keep trying to think of the psychology that goes into shorting a name like that.
I think it's the largest retailer in North America. 90% of it's like 95% of Americans live within 10 miles of a Kohl's or something stupid.
Yeah.
Almost every single one of their stores is profitable. They have loyal customers. Mm-hmm. They're going through a transition that they made some mistakes that they admitted. They changed some of the leadership,
namely with some of the jewelry brands they had in the store.
And they have a great partnership with Sephora now that's going into every store. They're doing the right things, and they're not even close to bankruptcy. They're making money. They're profitable.
I think about the conversation I had with a close friend of ours about Kohl's. Yeah. And the question he had was, I just don't really think of Kohl's that much. It's kind of a nothing burger of a place where suburban moms go to shop to a degree, although I have bought pants there, fun fact, and they fit fantastic. But the people just don't think about them that often, or they think they're a dying brand because they remember all the stores that they closed. There's a lot of former Kohl's locations out there, but again, to Quinn's point, part of the reason a lot of the remaining stores are so profitable is because they closed they cut all the dead wood out, essentially. Yeah. They just got more efficient, and I don't think people properly appreciated that on the name, which is why it's now subject to a meme craze.
Yeah, what can you do? Well, you think it's about that time?
I could. There was also...
never mind. I guess it's not that time.
There's a couple more things I could touch on. I mean, there's been talk of Kraft Heinz breaking up.
Oh, yeah.
That big giant, that food giant. And I thought it was really interesting because I actually have been in the business long enough that I do remember the merger, which for someone who hasn't lost all of his hair yet is unusual to have a long-ish institutional memory.
I mean, it was only 2015 that they merged.
Well, yeah, but I'm 29, and that was 10 years ago. So they merged, and it's just they've been able to raise prices. And if you look at this from a market perspective, there was a lot of mergers, but now you're getting to the point where prices have raised enough and have actually raised in excess of inflation in many cases. Like, for example, you look at McDonald's prices. That's a fast food chain, a little bit different, but they rose. They had some of the highest price hikes in the sector, and far in excess.
We lost $1 McChickens.
We did lose $1.
That is a real failure of America, the American economy right now.
But as you have seen these price hikes in excess of inflation, it has driven higher margins, which you think is good for these companies, right? But the problem is, as you've gotten higher margins, the food as an industry is hyper competitive. It's easy to get into oftentimes unless you place yourself strategically in certain parts of the market. And it's got very narrow margins. So when those margins expand, what you've started to see market participants enter that couldn't afford to before, that have in turn eaten Kraft Heinz market share. you're getting a little bit more artisan brands because the prices can justify that sort of thing, which is in turn probably going to put some downward pressure on prices depending on how that works. And again, you've got some questions about how that interacts with tariffs, but it's going to be dependent on the specific good, and like we don't grow bananas here, but it's I mention this because it actually might make sense to break up Kraft Heinz, even though they merged just 10 years ago.
Yeah, I mean they're talking about. I think part of what they want to do is separate this, like what they call the new division of foods, of like natural stuff, taking out the dyes and all this kind of thing. I think they want to separate that old line business, which the name of the company is Kraft Heinz, and by both those products they're splitting off into this other company.
Wall Street loves to do this. They're constantly figuring out ways to do mergers and undo mergers and take people private and take people public, and they may do so repeatedly with the same company multiple times.
Generating value, efficiency.
Yeah, actually, though, like people criticize mergers, but assuming you're not creating a monopoly, there's a reason they happen.
Oh, speaking of mergers, those two rail companies are looking at merging.
They are.
Rail companies, breaking apart the rail companies is kind of what started the whole breaking up monopolies at the turn of the century.
Yeah, that and Standard Oil, which it's kind of wild to be talking about those things today, but the U.S. has one of the world's largest and most developed freight rail systems.
Yeah.
So it is kind of a danger if you get too many mergers, but this particular administration is famous for being friendly to otherwise dangerous mergers.
Yeah, they're going to allow the Paramount merger with Skydance for $8 billion too, the FCC.
Yeah, and all it took was a $15 million bribe.
Yep.
And Colbert getting fired. So I think the merger will probably go through. A lot of mergers these days don't really wind up with much scrutiny. It's been interesting that you bring up those mergers because the way we think about mergers has changed substantially over the decades and the century since those antitrust laws were first put into place. For a long time, there were kind of more vague standards on what constituted a kind of dangerous trust forming. But in the 1980s, around the Reagan administration, there was a particular chairman who got appointed, and I cannot for the life of me remember his name. I just know that he was appointed by Reagan.
I don't think it was Chairman Mao.
Probably not Chairman Mao, but he was very much instrumental in pushing away from the more vague standards that were previously established under like the New Deal Acts and moved towards consumer prices as being the driving deciding factor on whether a merger would be harmful or not. So it's interesting to start to see mergers starting to get approved even without that standard now, basically. So I don't know where this ends, but it's an interesting path to take, certainly.
Yeah.
And then we also had some crypto stuff happen. We had the Genius Act passed, which I would be remiss not mentioning. But as far it establishes regulations for like stable coins and things like that. So it's interesting operationally and procedurally, and you might get faster clearing at banks if they establish interbank stable coins.
Yeah. There was also, I saw something about, there were some exchange hacks in July. Bybit alone lost $1.5 billion because of a hack.
Yeah. It's interesting that happens because like the part of the premise was that it's not supposed, I mean, everybody is subject to hacking in some sense or another. There's no such thing as unhackable.
Yeah.
Even if it's just social engineering. But, crypto was kind of partly invented to kind of get rid of some of these other kinds of vulnerabilities in the financial markets, in addition to just general decentralization. So the fact that it's still subject, they're basically just reinventing banks, is always endlessly amusing to me. They were founded on the principle of kind of anarchism, anarcho-capitalism, and now they're just reinventing banks and government regulation. And
well, it's always ways of determining, storing, and exchanging value, right?
Right. And I've said it before, I'll say it again. Most financial innovations have begun kind of in the form of, is this a scam? That's usually the question that gets asked first when you wind up with a financial innovation. Fractional reserve banking still gets questions of whether it's a scam, even today. But it's still amusing.
Yeah.
to me. So,
On that note, think it's about time
I think it's time.
for this day in economic history, July 24th. So, I've got quite a few today for you. And
I
then
won't peek.
one that's actually more relevant than I realized based on our conversation. So, July 24th, 1851.
Really digging deep for this one.
Oh, there's even older. But Britain abolishes the window tax. After 155 years of charging citizens for the luxury of daylight, the UK finally scrapped the window tax on July 24th. Homeowners could unbrick their windows and let the sun back in, no longer taxed for their vitamin D.
Amazing.
Do you know about that, the window tax?
I did.
Yeah, yeah.
I didn't know it was in effect until the 1850s.
Oh, yeah. July 24th, 1866. Tennessee becomes the first ex-Confederate state readmitted after the Civil War. It meant that early access to Reconstruction funds, and the Nashville Union boasted that it had beaten Georgia at the cashier's window.
Great. Good for them.
July 24th, 1877. As the first major national strike escalated, mobs in Chicago shut down rail lines like the B&O and Illinois Central. Train traffic stopped, tensions rose, and the Gilded Age capitalism took a punch in the teeth.
You know, that does remind me. One of the I like the efficiency of railroads, but one of their single points of
I
failure.
like trains.
I'm not a train guy, I swear, but I like systems. The interesting weak points of train systems is that if you get a strike, you know, it's not like the roads and highway systems can go on strike, but railroads can.
Yeah. Yeah, that's true. Yeah. July 24th, 1933, FDR coins, quote, first 100 days in his fireside chat. On live broadcast, Roosevelt hailed the New Deal's early wins, millions back to work, and scoffed at waiting for recovery before rebuilding. This was his first 100 days in office, and every president uses that. July 24th, 1952. Over 500,000 strikers returned to work with a raise after Truman's attempted steel mill seizure flopped in court. That was the massive U.S. steel strike after 53 days. July 24th, 1959. Inside a model American kitchen in Moscow, the Soviet premier mocked dishwashers. Nixon clapped back with that even steelworkers could afford them. This was called the kitchen debate between Nixon and Khrushchev.
Wasn't that also the famous debate where Pepsi negotiated a deal to enter the Soviet Union and sell their product?
I think that happened much later, because this
Okay.
was in 1959. I think that was in the 80s.
Well, I'm not going to look it up. So you are encouraged to, dear listener, but I will not.
July 24th, 1974. The unanimous U.S. Supreme Court ruling vaporized Nixon's last legal defenses, and they ordered him to release the Watergate tapes.
Ordering the president to release something. Oh, that's something that comes up again and again.
1979. Jimmy Carter interviewed Paul Volcker for Fed chair.
Famous man.
Yeah, yeah.
Raised rates.
So, 1997, during the Asian financial crisis, Malaysia's prime minister publicly scapegoated, quote, rogue speculators. He was referring to George Soros.
George Soros gets all sorts of hate he doesn't deserve. He's the center of so many conspiracy theories, and as far as I can tell, basically none of them have merit unless you're a Nazi. I'm going to get hate for that one.
1998, just 23 days after I was born, Enron announced its £1.4 billion purchase of UK water utility Wessex Water, which they nicknamed Wet and Wild. 4 years later, Enron imploded and sold off Wessex.
Gotta love it.
2008, the Fed held an emergency call to expand credit facilities at 4:30 p.m. They extended auction loan terms and increased ECB swap lines, pumping caffeine into the jittery global markets haunted by subprime ghosts.
Haunted by subprime ghosts. I love that imagery.
Oh, yeah. July 24th, 2009. The U.S. minimum wage hits $7.25, and it has not raised since.
Famously, the states have gotten innovative with it, though.
Yeah. July 24th, 2018. The Trump administration announced $12 billion for farmer bailouts. It was an emergency aid package for American farmers.
Okay.
Yeah.
Yeah, they love bailing out the farmers.
Yeah. Gotta love the farmers.
Got to keep the food flowing.
And here's my long story.
Excellent.
On July 24th, 1797, the newly completed headquarters of the First Bank of the United States officially opened to the public in Philadelphia. The grand marble building, designed in the neoclassical style with Corinthian columns, was the first purpose-built federal bank building in the U.S., symbolizing a bold and controversial experiment in national finance.
Oh, how bold.
The bank itself had been chartered by Congress in 1791 at the urging of Alexander Hamilton, the first Secretary of the Treasury. Hamilton believed that the fledgling republic needed a central financial institution to stabilize public credit, manage war debt, and unify the monetary system. The first bank was authorized to hold federal revenues, make loans to the government and to private borrowers, and issue banknotes that circulated as currency. It was contentious. Thomas Jefferson and James Madison opposed the bank as unconstitutional and economically elitist, but President George Washington signed it into law. By the time the bank's headquarters opened in 1797, it was already central to U.S. finance. It operated branches in multiple states, facilitated tax collection, and brought a measure of monetary discipline by checking the overissuance of notes by state-chartered banks. It also helped finance infrastructure and early U.S. industrial activity by providing commercial loans. But the bank's charter had a 20-year limit, and when it came up for renewal in 1811, it ran into a new Congress that was more Jeffersonian in character. Many legislators saw the bank as a tool of the Northeast merchant class and resented its concentration of capital, and opposed the idea of a federally chartered financial monopoly. The reauthorization failed by a single vote in both the House and the Senate, and the bank was shut down.
Yeah, famously something that's never been controversial ever again.
And so what were the economic consequences of this, right? Disorganized currency. Without a central regulator, hundreds of state-chartered banks began issuing their own notes with varying levels of backing, and the value and acceptability of banknotes became highly inconsistent, undermining confidence in money.
Yep.
There was loss of fiscal coordination. The Treasury Department was left without a central institution to manage federal receipts and disbursements, complicating war finance and day-to-day operations. The War of 1812, financing collapsed. Within a year, the U.S. was at war with Britain again, and the government found itself unable to raise funds efficiently. Lacking a national bank, the Treasury had to rely on costly short-term loans and struggled to float war bonds. By 1814, the government suspended specie payments and defaulted on some obligations. Specie payments, yeah. The experience convinced many former skeptics that some form of central banking was necessary after all. In 1816, Congress chartered the second Bank of the United States, modeled closely on Hamilton's original blueprint. Ironically, many who had voted against the first bank in 1811 now supported its successor, having seen the risks of going without one.
You know, the number of times in American history where we've gone, wow, this thing, I'm not feeling any negative effects. This thing must not be doing anything. And then we tear it down. We found out it was doing something critical.
Yeah.
And it's, you know, every once in a while we'll tear something down and then nothing breaks and we're like, oh, I guess that wasn't necessary. But, you know, we're just very good at breaking things.
We're doing great. We don't need this thing that's helped us do great.
Right, exactly. Who needs banks? Who needs money? Money's just a scam, anyways.
Yeah. But we didn't have the Federal Reserve until 1913.
Yeah. Federal Reserve is a lot newer.
But the first bank still stands in Philadelphia, and it's a National Historic Landmark.
Yep, sounds about right. You know, I wonder if the White House would have burned down if they only hadn't gotten rid of the First National Bank. They would have.
Did the White House burn down?
Yeah, the Canadians burned down the White House in the War of 1812.
So you think that maybe it wouldn't have burned down if we didn't get rid of the bank and then maybe didn't get into the same situation?
Yeah, I think they would have been able to pay their troops better. They probably wouldn't have had as chaotic of financing, and maybe the White House wouldn't have burned to the ground.
I feel like people skip over the fact that the Canadians burned down the White House.
The Canadians don't. They love that tidbit.
Any Canadians out there, do they teach that in Canadian history textbooks, burning down the White House?
100% they got to teach that. Any Canadian I've ever talked to has known that fact. It might just be a pop culture thing, though, at this point. And technically, they weren't Canadians at the time. Again, it was the War of 1812 between the U.S. and Great Britain.
Yeah.
So, because at the time, they were a colony still. They didn't join with us in the Great Revolt.
They should have.
1776.
They missed out.
They did. They could have been the 51st state.
Calgary still wants to be, apparently.
Oh, yeah, I always forget about that.
Yeah. Well, on that note, this has been the latest Capital Call. Had a lot of fun today, and we will see you next time on episode 16.
Stay liquid.
Stay liquid.